Hey everyone! The landscape of Indian trading is shifting, and recent changes to the call auction session, or CAS, have introduced a crucial layer of price discovery that every trader needs to master. There's some confusion going around. Traders are asking, has the classic 3:15 p.m. power hour changed forever? Is the closing price still the holy grail of the daily candle? Or has CAS broken the rules of technical analysis? Before we dive into the mechanics of CAS, let's widen our lens. How do major exchanges around the world actually determine the price of an asset? They primarily use three mechanisms. First is the common continuous trading. Think 9:15 a.m. to 3:30 p.m. in India. Orders match instantly, creating high speed and liquidity, but this method can sometimes leave prices susceptible to momentary, artificial spikes. Second is the classic call auction or single price auction. Instead of matching orders immediately, the system pools orders over a brief window. At the precise end of that window, an algorithm calculates a single equilibrium price that clears the maximum volume with minimum leftovers. Major markets like the New York Stock Exchange and London use this method to minimize volatility during their high-stakes opening and closing bells. Finally, we have the volume-weighted average price, or VWAP close. In this system, the official closing price is calculated as a weighted average of trades over the final, active 30 minutes. This is what India has traditionally used, calculating the close between 3 o'clock and 3:30 p.m. Today, we're unpacking exactly how India is modernizing with dedicated call auctions and what that means for your daily P&L. So, what is the reason behind this evolution? Why did SEBI and Indian exchanges feel a dedicated CAS was necessary? Historically, we used a pre-open auction and then relied on the 30-minute VWAP for the close. But with the rise of high-frequency algorithmic trading, things started to change. On heavy volume days, and especially on explosive derivative expiry days, massive institutional order flows right at the end of the day started creating intense artificial volatility. The market would see sudden, illogical price shifts between 3 hours and 29 minutes and 3:30 p.m. These were often sharp manipulations that caught retail traders completely off guard, distorting the fair value of an index or stock. This is the genesis of the modern CAS. It's designed to neutralize these shocks. CAS doesn't allow immediate matching. It forces everyone, algorithms, institutional funds and retail, to wait while their liquidity is pooled together. The exchange then finds the single most efficient, consensus-driven market price. It's about creating fairness and eliminating micromanipulation. Let's get tactical. What is CAS, and what are the new timings on your screen? When the auction begins, you see nothing executed. The system is silent. But the exchange is busy calculating a constantly changing indicative equilibrium price. This is the system saying, if I matched everything right now, this is where the price would be. Once the window shuts, the system confirms that single price, and every matchable trade is executed at that price simultaneously. Here is how your entire trading day is now structured. 9 a.m. to 9:15 a.m., the pre-open CAS. The first 8 minutes are for order entry, then a 4-minute matching and discovery phase, and a 3-minute buffer before the main market opens. 9:15 a.m. to 3:30 p.m. This is the continuous trading session, the normal hours you are used to. 3 p.m. to 3:30 p.m., the closing price period. This is the crucial half-hour where the data is gathered for the final 30-minute VWAP calculation, establishing the official daily close. Finally, 3:40 p.m. to 4 p.m., the post-close session. Here, you can execute trades, but only at the discovered official closing price. This is for managing overnight positions with zero slippage. Now, let's address the confusion for all you active traders who use the daily candle close as your single most important signal, your holy grail. Some of you have said to me, I love taking positions between 3:20 and 3:25 p.m. once the day's candle structure is clear. Should I stop doing that? Here is your straightforward answer. No, you don't need to stop taking 3:20 positions. But you must adapt how you execute your trades. Here are the key shifts in your behavior. First, realize that the price you are trading in continuous sessions at 3:22 p.m. is the market's current, volatile last traded price, or LTP. But the final official close you see on the daily chart is the calculated 30-minute VWAP. In trending or highly volatile markets, the difference between what you pay at 3:22 p.m. and where the stock is officially marked for the day can be significant, leading to unexpected overnight P&L swing. Second, liquidity can thin out dangerously in the final active minutes, from 3:25 to 3:30 p.m. Your new best practice is to move your daily candle decisions a few minutes earlier. Formulate your opinion, and look to execute with precision between 3:10 p.m. and 3:20 p.m. If your priority is the exact, official closing price to guarantee no slippage for a position you must hold overnight, skip the continuous session volatility, and use the post-closing session between 3:40 and 4 p.m. instead. Let's answer the ultimate confusion once and for all. Does CAS change the importance of the daily candle close? The answer is actually the opposite of what people fear. The CAS makes the daily close more robust, more accurate, and more meaningful than it has ever been. To understand why, you must understand the psychology of open versus close. The opening price is often driven by pure emotion. It reflects reactions to overnight news, international market sentiment, or initial panic. The market opens and then spent hours finding its bearing. The closing price is different. The close reflects smart money conviction. It is the price at which market makers, large institutional funds, and the biggest players are willing to settle their risk for the day. By pooling all this significant volume in the CAS, the market filters out temporary noise, high-frequency spikes, and retail emotion. It reveals a consensus value driven by those who move the market. So, when you see a daily candle breaking out or breaking down, you can have high confidence that it is a signal with real, auction-confirmed conviction behind it. The daily close is still the holy grail, just validated to a higher standard. Let's lock in your summary and daily workflow for this new CAS era. Your first takeaway is that price discovery is now cleaner. CAS reduces chaotic spikes at sensitive moments, creating a fairer field. Second, remember that your daily candle close signals are now validated by stronger volume and institutional consensus. Trust the signal. For your execution, don't chase market orders in the final continuous trading minutes. Look to lock in your strategy during the 3:10 to 3:20 p.m. window with limit orders, or use the post-close session for zero slippage execution at the absolute official closing price. This change is an evolution toward a more efficient market. Adapt your workflow and trust the strength of the new close. Thank you so much for watching. If this video brought value to your trading journey, please hit that like button, subscribe to the channel, and drop a comment below with your thoughts on CAS. Until next time, trade smart and stay disciplined.